And we are live. What's going on, everyone? I hope you're well on this Saturday. This is Jordan with Conquer Trading and Investing. This is a public live stream. It is a long time coming. I feel like that we've been off the public side for quite a while. Look, the only intention there is that we're simply working hard each and every day. Nevertheless, it's always my intention to check in with everyone to review and discuss markets. And on this beautiful Saturday here today, I just wanted to take the time and just do an old school live stream. Take a look at Bitcoin, take a look at Ethereum, some alts, take a look at the markets, and just with a chill vibe, discuss what's going on. And you know what? I'm just happy to be here. So let's get into it. Let's take a look what's going on, and we'll do it, open style. We're just going to take it as it comes, and I'm going to start over here with Bitcoin, and I'm going to zoom in though and take a look at what's going on really since the bear market, since the top over here of the cycle. And then obviously we have so far the low is in. Early on, we were looking at a level over here that I called the previous cycle ceiling. It was like 17,250. And the reason I called it the previous cycle ceiling, because a lot of people were watching the all-time high in price and from the last cycle. And that is no doubt the all-time high, right? 19,600 more or less. But you can see in this area, this is where price really formed resistance, 17,250. So I was calling that the previous cycle ceiling. And after we traded under it during the FTX debacle, right, you could see that that's what we were watching. If we came back above it, saying, all right, that's the important level, not the all-time high, not too much volume traded back and forth at the all-time highs. This is where the market was able to find resistance. It wasn't just resistance. You could see during the bull market breakout, you can see the bull market breakout occurring right over here, July 2020. We were live and on YouTube. And during the live on YouTube, we called that as the bull market breakout. We came in for that retest and broke out. And then you could see after price came above that previous cycle ceiling, it then confirmed it into support. It's a big level the market was paying attention to, which is why into December, we were watching and calling for the bull market breakout prediction. And I know sentiment at that point was extremely bearish. We had to go back and forth. You could see that we came above the line and then came back below it, and we flipped back short and then flipping back long, right? And you know what? Since then, 2023, first half, we've seen some nice upside, over 100% move to the upside. Right now, for months, we have been consolidating in this range, right? And I call it no man's land. And I call it no man's land because until we break above it, and if we break above it, by the way, I can foresee a quick and sharp move into something like 37 to 40K easily, right? There's not too much in the way in that area. At the same time, if we break below, right, and this little area over here, this is when we had that special announcement. We saw BlackRock say that, you know what, we want a piece of this. We want to bring our clients into this. There's demand. They're asking for it, and they filed for a spot ETF. If that low is to give hold, right? If that low is price closes below there, we have this line that's highlighted in green, and I call that the bull market invalidation. And as long as we're able to hold above this trend line off of the lows over here, this is super healthy, and we're seeing a lot of that rhymes with past cycles and past behavior. But this time is already different in many ways, and each and every time is different. And if we were to break down over here, that would be a cause for concern. If at any point this trend line was taken out, at that point in time, I would be looking for some further downside. And you know what? If we're testing there, if we take below 24,700, at that point, as we're coming in for that important bull market trend line retest, at that point in time, we'll look at what levels we have below. we don't need to do that right now. Actually, right now we're seeing on this Saturday, right? We're seeing Bitcoin enter the market to the long side. And, regardless of what's going to happen over here, I don't know, but you could see from a traditional TA perspective, that purple line, you could see that nice breakout came in for a retest. And now we're seeing if we resume up, right? Now, for the resumption to take place, there's a couple of levels that we want to take out. We want to take out the swing high from Thursday, right? We want to see breakout, retest, resumption, right? Then we also have over here, not too long ago, do you all trust weekend pumps? I don't trust weekend pumps. And there's something particular about this one that is a little out of the ordinary. It has to do with Solana leading over here. We'll look at that in a little bit, but I want to make sure that we take a look first at what's going on with Ethereum. And by the way, it's Sunday that potentially the U.S. government, once again shuts down. And markets don't like uncertainty, but maybe the markets don't really care too much, in so much as that, well, they've shut down before, they shut down recently, and every time they do, it seems that, within 10 days, markets, S&P puts in its low, and then is actually trading up, about 10 days after the shutdown, S&P historically has traded up 2.5%. As you go forward from the shutdown, it's up even higher. That favors the seasonals. I think a lot of people are watching, and, they favor that. Oh, do we not have my pointer in? I'm sorry. The whole time I've been circling and sketching on these charts with you, and it hasn't been showing. I was talking about the resumption that's needed to confirm the resumption. And then over here, and a lot of people have their eyes on October. And historically, it's been, very green and very favorable. We saw September put in a green month on the Bitcoin over here. And historically, it's a very red month. So listen, if your investment strategy is somehow incorporates seasonals into it, well, how do you manage? I don't know. I don't understand how you manage risk around that. So either way, we could look towards the green, and maybe what we're seeing this weekend is a little bit of front running of that October behavior. I wouldn't be surprised if that's what we're seeing. Look, I'm long here. This morning we entered long on the Bitcoin. I hope that it extends, but you know what? We'll see what happens. It's been a minute since we looked at Ethereum. We'll come back to Bitcoin. We'll come back to everything. Like I said, this is more along the lines of just here to touch base and have some fun and do this in a very relaxed style. Most of the time we are out there together. We are, you know what? I meant to make this a live video here for the public side, and I didn't do that. I just put this out for CTM, which is beautiful. But I want to see if I could change this for live, since I did let all of Twitter know that we were going live. So just bear with me 1 second, CTM, and just let me see if that's a quick fix right over here inside the YouTube dashboard, and then we'll continue on over here. All right, so we got live, and let's say this is unlisted. I'll make this public and publish. All right. There we go. So, and then let me just take this down, come back over to where we are. Simon, you know what? The kids got to go to a special event this morning. I'm here, and it's our normal time we go live, and I am just like in a really good chill vibe. I was spending the morning looking at a lot of the work we're producing. And, I miss you guys all the time. So I wanted to go live and just take out what's going on in the markets. And, it's nice that we have already taken the Ethereum. Nice to see the Bitcoin here following suit now. And again, just fingers crossed. We don't know what's going to happen. Mort's, everyone that's just joining us, welcome. I unfortunately didn't go live to the public side because so used to going to the private that the first 10 minutes of this stream do go back and watch. It's a good introduction. Maybe watch that at like 1.5 speed and catch up to us in real time and the live time. But we're kind of setting the stage for the tone of this session here together. It's been a minute since we've been out on the public side. That's not intentional. It's just that, each and every day we're putting the work in and we're doing our presentations and working in our environment to do what we need to do. But at the same time, I have lots of love for everyone in the space. I love the whole community. And you know what? On this beautiful Saturday, I just felt like, hey, let's all get together. Let's check in the markets and let's keep ourselves in check, right? A lot of people right now might be looking with starry eyes in October and looking for that October green. And I hope it comes. I mean, we're starting to position for it. And I hope it comes. If you remember, one of the last times I'm going to zoom out here on Ethereum, right? And you might be wondering if you were yourself to go ahead and draw a trend line, a parallel channel between the all-time high from the last cycle here, 2018 January on Ethereum, and then connect the May 2021 high, which again, you could see price found resistance in November. And then you could extend that line. You could go down as far as you want. Like you can technically go down to the wick off of the March 2020 lows where price found support. I imagine, or I believe that this over here with this touch and where price was looking and then off the finally found support, that's just where I have the low. And you could see it's just the structure using a log chart of Ethereum for this time period, right? And basically that means that, well, it holds until it no longer holds, but it provides a really good situational awareness. The last thing that you all saw me put out there, and I was doing it on the Twitter, and I was pointing out this ascending triangle that was forming in the market. And the reaction was that, well, that's an ascending triangle. That's a bullish chart pattern. And that's breaking up. By the way, if that did break up, a measured move on that is quite attractive. We could have saw something like, now I don't know. You see this little green line I have over here? I don't know if the ascending triangle starts over there and it's like this, right? But listen, I'm going to say we probably had it right because of the breakdown over here. So I'm using the measured move from this area over here, and I'm taking the first leg down, and I could say that's a big move, right? It's 100%. So could that be the expectation if we were to broke up with Ethereum here, been just off of kissing the sky to those new all-time highs? It could have been a big move, and it still can be. Oftentimes, when you get a pattern, and the things about chart patterns is that they could break either way. Just because it's a bullish continuation pattern doesn't mean that it's going to break bullish. The odds of this pattern breaking bullish is something like 60% of the time in a bull market. And that's also like, if you zoom out, that's clearly a bull market, right? It's forever bull. But, this is a bear market as well. And, rather than just like closing your eyes and saying, well, this is a bullish continuation pattern, therefore it has to break bullish. And because I'm bullish and because like Ripple won their lawsuit against the SEC or the judgment that, alts are now going to, no, you have to use levels to manage risk around. And you could see that this wound up breaking to the downside. Now we are seeing, you could see this big candle. It's the first repair since the breakdown. By the way, often in markets, when you see breakdowns that wind up being fake outs, if this winds up being like a breakdown and then we shoot up and break out the upside, that could be a really big move because a lot of people get caught trapped. Okay. So often you do see that. Now, don't forget, we are currently in a tightening cycle, right? Right now, the Federal Reserve, why they've been paused, in September, why the market is pricing in another pause coming in November, that's still variable, and they're still running quantitative tightening. The Treasury is at the market with a relentless supply of T-bills, a relentless, like they just on the 28th, they just announced another 200 billion. And like that's sucking liquidity away from the market. Now, here's the thing. Anything could happen at any time, right? So rather than saying, well, we're in the middle of a tightening cycle, it looks like maybe we're even headed towards a recession. Things don't look good out there. That could cloud your bias. That could really cloud your bias. The same thing with the up only mentality and attitude, and that like the same people kept putting out these bullish fractals all of 2022, all the way down. And then like they continue even from the top over here. You got to look at the markets in more of from a neutral stance. Yeah, you want to take in all information and you want to absorb it and you want to form your opinion. But the way that I look at what's taking place right now in the world, as anyone could see, we are seeing like when you look at what's going on in geopolitics, you're looking at a war taking place, obviously in the Ukraine. Now I know there's wars going on all over the world, right? Like Yemen, there's still a war going on with Saudi Arabia. You could talk about what's going on to the Palestinians. You could forget about it. In Syria, like I'm not trying to single out, but I am talking about a world power, Russia, and it's a proxy war with the West that's taking place right now. That's a big deal, right? We could see things taking place right now with deglobalization, and right now we're seeing, right, we're like people have lost 60% in the last 2 years on their treasury holdings. These are unprecedented times, right? So what that means is rather than getting a little bit overconfident about what you feel is going to happen next, you're going to do yourself a huge service and favor if you just approach this with a great deal of humility and respect and understand that it's really difficult to navigate these markets. And rather than like just getting caught up in some type of absolute confidence, just try to like take it as it unfolds and as it happens. All right. I don't. Yeah. So look, right now we could have another dump coming in. Like in this particular moment, I'm like, you know what? I'm taking the entry and I'm crossing my fingers, but I never know which one of these are going to wind up carrying or not. I thought, and this over here, this is really interesting on Bitcoin. This is where you saw the favorable ruling for Grayscale against the SEC. And you saw that we were in a nice short, by the way. And you saw that massive pump up. And everyone, like you get all emotional and people like, oh, we should be long. I want to be long. And then like all of a sudden you see the wick start coming down. And then we were like, came down for us to the last 10 minutes, between holding this trade or letting it go. And yeah, so we took a little bit of profit and then that's fine. But, had we held this one, it would have wound up being, and over here, like but that's not what's happening. We're not breaking down right now. We are, and momentum is shifting to the upside. So again, follow the momentum, follow the technicals. You could see even this is for sure a nice trend line break retest. And we're seeing if we resume out. Now, by next week, this could be drop the trade. It didn't go anywhere. We could be breaking down, but we will be short if that, but that's not what's happening right now. And you have to know what type of time frame you're trading. By the way, as we're looking at a trend line break, discretionary trading, we call this like CTM 1.0. uh, you never would have taken this trade over here, right? We talked about the previous cycle ceiling, 17,250. Price was below it. And like everyone, if you come into January 2023, I mean, there are a lot of calls for significantly lower Bitcoin, and everyone was extraordinarily bearish, but momentum shifted. And as a momentum shifted, same thing over here, what happened during the banking crisis. We were, and look, the technicals align. Look at this trend line that we had over here. This is the US banking crisis low, and then you have the BlackRock, right? We were one bar away from entering short, but that didn't happen. And you saw the Fed jump in and take collateral off of these regional banks' balance sheet for a year. Yields, by the way, are much higher now. I don't know what to do. Who enters a trade that is this far overbought, right? Look at that massive candle. It's so overbought, and it's into resistance. Look at all this resistance from February. Who does that? Well, we did, because we follow the momentum, and that's what we're doing now. It's kind of like eyes closed, and we'll see what happens. But this is the first repair that's taken place since the breakdown. This is a massive technical breakdown. A lot of traders and a lot of people were waiting for this. And I'm coming off the June low over here. Isn't it interesting that Ethereum bottomed in June and Bitcoin didn't bottom to November? What do you all make of that? I mean, I find that interesting. A lot of people looking at Ethereum's monetary supply right now, and they're seeing it starting to increase. And there's a lot. I don't know. I'm following like the data, and I can make the observation that so far Ethereum has bottomed first, right? Now, normally Ethereum in a bull market, it's going to outperform. Right now, we're seeing Ethereum's already taken a long entry ahead of Bitcoin. But what's worrisome for me is Solana has. We'll take a look at that in 1 second. So a lot of people were lining it up off of these two touches over here. And you could see this other touch over here. And they were waiting for a breakdown of this triangle. Well, there's this trend line over here, the one highlighted in red, that offered significant opportunity. Let me jump down to a smaller time frame now. You had that. What's interesting about that purple line that we added in? Two things are interesting. True enough, we did dump down to it. Here's the two touches we just put in, right? That was the second touch off the June bottom. Off of the dump of the red line, that's where price found support. So that was, I mean, magical lines doing magical things. But notice that we then came above it and weren't able to hold, right? We then retested that line and came into the resistance that we're in now. So here's the first touch. Here's the second. We came right into that resistance, and then we traded below that line again. See the lower high that Ethereum is putting in? And it wasn't like a ball underwater that you couldn't keep it. Wasn't able to hold it. And now we have that trend line break. And again, we also here were able to take a long position. And you can see that Ethereum not only entering the long, it is right now able to make a resumption up. It hasn't closed above it. And for close, I like to look on the daily. So I would like to see that look on the daily over here. By the way, thank you for that. Anyone who wants to go ahead and enjoys being here on this Saturday, I missed you all. If you want to share the love, definitely go ahead and smash the thumbs up. If you don't, please go ahead and let me know. Hit the thumbs down, because hopefully the YouTube algorithm will not show you any more of our streams, because you know what? It's beautiful. And you know what? I really missed y'all. I love doing these things. So here we go. So Ethereum here is, we want to see it close above here and that resumption to continue. And, look at that. Like that's a nice little move into where that last high was off of the grayscale ruling, because not only did Bitcoin pump, alts pumped with it. We would love to see price be able to take that out. And who knows how far this carries. I hope it does carry, right? So let's go ahead and take a look. And I wanted to show you and look at it from this perspective over here. All right. Well, maybe we should start. We'll come back to this one in a minute. Let's look at what's going on here with Solana. All right. So this is all experimental. This is what we call CTM 2.0. Right. And what you're looking at on this chart is the blue mark is the high water mark. Now, this is using the PNL intra-trade, right? And this is like the highest price point intra-trade that price is taken. And then this, so that's the high water mark in the blue over here, right? So by the way, a lot of traders are always looking for, every week or every month, or they put aspiring traders put those type of expectations on them. Like, I want to be consistently profitable. What is consistently profitable to you? And in what time frame, and what does that mean? Most highly successful traders, elite traders, they go through periods most of the time where their P&L is running sideways, right? It's consolidating. We were looking at Ed Seykota is one of the greatest traders of all time. We were looking at his performance between 1980 and 1990 during that 10-year period. He was able to turn something like I'm gonna say it was ridiculous. It was one of the highest returns of all time. And as you look at that, his P&L through that time period, you see multiple years throughout that decade where he has not made new all-time highs. So I think where a lot of people get it wrong in trading is putting up the false expectations. It's so great to see these familiar names. So Hunter, dollar cost averaging is going to wind up. What happens if we enter into a situation where the business cycle is allowed to play out? Credit is extraordinarily tight right now. It's getting tighter. Now, the job market, we're seeing through revisions a decrease in payrolls, but it's still pretty strong and hanging in there. And it's possible we see a re-strengthening of that. I expect actually it's going to look really good coming into the end of the year because of a lot of seasonal hires. Amazon is out there hiring 250,000 people, and I think it's going to look okay. But I don't know what happens into 2024. And it looks like that we are headed for a recession. And don't forget, we're going to find out we were in that recession after the fact. No one knows. The moment we hit recession, it's not going to be announced. And what happens if the business cycle is allowed to play out? And I mean, Bitcoin looks really healthy, I'm going to say, but notice my tone. Let me just jump over to Bitcoin over here. So there's a little bit different aspect that's taking place over here. And you could see, let me come back down and look at these fib retracement levels. And you could see from the all-time high to the low over here, right? Bitcoin so far has been able to retrace almost to the 0.5 fib. Now, last cycle, it was a lot different, right? Last cycle, you were able to see Bitcoin retrace at this particular time. Here's the low, right? All the way before the halving. The halving is May 2020. So you could see that it has retraced all the way to the 0.786 fib. That's also different if you go back to the tightening cycle, the bear market before that. You're seeing Bitcoin also retracing to the 0.876 fib. Now, this one is right before the halving. And that might happen this time as well, right? I could say so far we're suppressed. Don't forget, U.S. equities also, I mean, they've had a great 2023, but they're also not able or haven't yet been able to make new all-time highs. That's also different if you come back into 2019, after the Fed stopped raising rates, U.S. equity markets were able to, now whether or not the Fed has stopped raising rates, that's all debatable. We're not going to really get into the macro right now, but what happens if, Hunter, and this is just, I want to prepare you because it's fine if your plan is to continue dollar cost averaging regardless of what happens. What happens if the business cycle plays out? What happens if we do get an invalidation of the bull market breakout? And then what happens if we come down and we test this level over here? It's right around 18,500. Now you might be saying, well, Jordan, I'm prepared to not only continue to dollar cost average, I'm likely going to make a bigger purchase. And that's going to lower your overall cost. And that's good, if, again, like the bullish case for Bitcoin, and there's nothing out there that I say that has changed as far as my bullish case for Bitcoin. It is actually in many ways strengthened. We continue to see adoption through new wallet growth, even through the bear market. I imagine as price, when price hits new all-time highs, that really accelerates. Don't forget, most people, they are attracted, not now, not if price, or not when price was below $17,000. They're attracted as price hits those new all-time highs. That's when you see that acceleration of adoption. That's when people look at Bitcoin and they're like, I missed it. I have to find the next Bitcoin. Let me go ahead and speculate. What should I do? Should I get some XRP or whatever? And Phil, I mean, as far as XRP, so my views on XRP is that for me, it's extremely hard to trade. I cannot find out of all the altcoins, there's like two that I am not able to find a mechanical solution to, right? Algo and XRP. And XRP has like very unusual movements and price action. It'll be like, coming down and down, and then it has a rip up. And then that rip is distributed into, and then it comes down and has a rip up, and then that rip is distributed into. Is Ripple distributing into the rip up? That maybe, likely, I don't know what it is, but do I think that Ripple is going to become, or XRP is going to become the settlement layer of the banking system? I don't think so. It seems to me that a lot of central banks already have decided that they are introducing their CBDCs on the Ethereum blockchain. I have seen banks recently, Citi just introduced their own native token. They're not using XRP. I don't see it. Now I don't want to discourage you, Phil, or anyone else from the work that you've put in and what you have discerned. The only time I gave a warning about XRP was actually prior to the SEC's litigation, and that wound up that was true to form. And then afterwards, I also was like, you know what? Now, if you were into speculating, this might be the place. And look, I don't know. I focus on what I believe to be, when you're looking at the cryptocurrency space, when you're looking at Bitcoin, which today is roughly a $500 billion asset. We saw it in the bull market become $1 trillion asset. And I look at Bitcoin and I say, you know what? Not only do the network effects continue, not only does the adoption continue, not only are more and more people opened up to what actually money is, and like as people are seeing rapid inflation in their lives, and they're seeing the cost of goods like rise at a rate they've never seen before in their lives, a lot more people are open to and want to understand money and find ways to protect themselves. You saw it in Costco right now. They're selling out of gold bars. That's a good sign that people are waking up. And I look out and I see, regardless of my thoughts on institutions entering into the space, like that, that my own personal opinions are irrelevant. What's happening is you're seeing massive institutional involvement. You are seeing Fidelity, BlackRock, and a host of others getting ready to launch a spot ETF. It opens up the floodgates. And then you look at the bond market, right? And if a fraction of that money starts coming into Bitcoin, and maybe that's why BlackRock is interested in it. Maybe BlackRock is saying, you know what? We are undergoing deglobalization. This is not the same regime we've been in for the last 40 years during globalization. And the only way that we're going to be able to protect our clients is to get them an allocation into Bitcoin. Maybe that's why they're interested. I don't know, but I do know that the network effects continue. And I'm betting, first of all, I'm a Bitcoiner because I believe personally that Bitcoin is fair and just. And I do believe that it offers hope. Now, I don't know whether or not Bitcoin becomes the global reserve currency. Or in my lifetime, I have no idea. But I do believe that Bitcoin has an extremely high probability of being able to overtake gold's market cap. That's $10 trillion. That's $10 trillion. $10 trillion. You know? Now, is it possible in the next decade that gold is significantly repriced? It's possible. Is then Bitcoin going to be able to overtake gold's market cap? I have no idea. I imagine if gold's repriced, that Bitcoin is actually shooting the moon. I imagine that. But off of today, whatever gold's market cap is, más o menos $10 trillion, I believe that Bitcoin is headed in that direction. I don't think it stops there. Because I think it's superior to gold in so many ways. First of all, it's digital, right? It's easier transferable. It's after the next halving this year in 2024. After the next halving, gold is a more inflationary asset than Bitcoin is, and that continues every 4 years. So I'm betting on Bitcoin, and I think that for me, as I look around the world and I see what is taking place, that I think it's important to have an allocation, right? That you hold. You learn how to self-custody, right? Cold storage. You learn what multi-sig is. You learn to be responsible, storing those keys in different locations. You have to spend the time. It's not, and you have to have that allocation that is there as a hedge against the financial system. It's not any different than owning physical gold and silver, right? And well, it is different in that I expect the appreciation to be much more, but owning gold and silver is a form of insurance against the system. And you might look at, people having this conversation a few years ago. They're like, come on, this stuff doesn't happen. What are you talking about? I was having this conversation in Mexico. Now, the people that I was having the conversation with ranged from the mid 30s to in their late 60s. And the ones in the mid 30s, they didn't live through the tequila crisis. It's happened before where you see overnight devaluation. But what's happened since then is that they have seen a crisis. From 2020 till today, they have seen a massive loss of purchasing power when they go to the grocery store or do anything else. And now you're able to say, oh, wait a second, I need to find a way to protect myself. But this had to do with XRP. And when we look at, XRP, I mean, is it because it's cheap that you feel that it's attractive to you? Or why? Right now, it's not I don't care what the asset is for me if it's tradable, because why I believe in having a position to hedge yourself against the financial system. Look, if you're looking to build fiat wealth, and if you're looking to actually have a source or a means to stack more, right? You might want to be looking at trading, but you're not. Hunter, you're dollar cost averaging. And I'm just saying, be prepared if we were to break here at any point in time, if we have the business cycle play out. I don't know whether or not 1850 holds or not. And if it doesn't, then, a test of the lows is highly feasible. And then, like I would this trend line here likely and could hold, and I would like to see it hold. It's a big area of support. But if it doesn't, I mean, you don't know what's going to happen, especially if like we're looking around and if you look around and like Japan is having some like massive problems here, right? The yen dollar is trading at 150. It was trading only a couple of years ago in 2020. It was trading at like 82, and Europe is watching. Things might get a little bit difficult this winter, and we haven't seen. Look at the 10-year. I mean, we might see a situation arise that Bitcoin is highly susceptible to the financial system, and it is not a risk-off asset. It is a risk-on asset, and one day it, whether or not it's overtaking that $10 trillion market cap or higher, it one day might become a risk-off asset. But it is absolutely not today. And you don't know what's going to happen. And if your strategy is to dollar cost average, and we are to enter into, and the business cycle is allowed to happen, because if nothing breaks, the Fed is not intervening. Not only is the Fed not intervening, they're continuing to tighten. And that it could go on for a long time. And if we enter into a prolonged global slowdown and recession, 4-year cycle behavior, that likely is not going to play out. Be prepared. That might mean, and if you have a source of income where you're going to continue dollar cost averaging, if that were to happen for the next year or two, okay, eventually the Fed cycle is going to happen, and the Fed and central banks around the world are going to be forced to return to outright easing. That is my main investment thesis for Bitcoin. Bitcoin is a hedge against the debasement of the currency. And it is a Ponzi scheme, and the only way to keep it going is to continue to debase it. But that's not what's happening right now today. And that does not seem or appear to be headed into a different direction tomorrow. So it doesn't mean that I'm not going to trade what's happening and trade the waves in between. This was 100% move up. If you continued shorting into that because we're in a tightening cycle, you got wrecked, right? You got to be able to go both ways. XRP is long-term. I mean, the market's not pricing that in. The market doesn't seem to agree with you on that. And it's not being exchanged between government CBDCs. Central banks are using the Ethereum network to launch CBDCs, but Ripple is like the thesis of Ripple continues to get destroyed. Jordan, have you found a good tool to transfer Bitcoin to other people directly? You could just send it to their address. So I'm not sure about that's without my understanding. If you've never transferred Bitcoin yet, that's a wonderful way to spend the Saturday. And you could open up, I don't recommend any third-party service at any point in time, but if you wanted to experiment and open up like a Blue Wallet and go ahead and create a Bitcoin address and send some to yourself, like, you should know how to do that. But there are amazing tutorials from people out there, ranging from like beginner's guides to storing and using Bitcoin to outstanding operational security, protecting like amazing, incredible stuff. See, that's not my strength. My strength is in trading the markets and trading and investing, and that's what I focus in on. So I recommend though, like learning to do that stuff. I think it's so important. Oh, the Israel. This is a great idea for those in the U.S. The Trading View, I think today or tomorrow might be the last day. They have a massive sale going on, 70% off, I believe, on the premium. And if you maybe, for example, had taken advantage of a previous year's Black Friday sale in November, it doesn't matter. They'll add on those months. That's a really good thing. BTC Sessions, great and friendly YouTube channel to learn maybe how to do those things, right? Tutorials are very important. So let me ask you a question though. This is experimental, we call it, but this is like CTMX, we call it. And CTMX, we've added in Solana. So on CTM 2.0, we got, right, Bitcoin, Ethereum, Cardano, and this is our big three. And look, I don't care whether you like, for me, an asset, as long as that I'm able to design a strategy where I can methodically profit from the market, I'm all about it. I don't get into any type of like Bitcoin versus Ethereum, blah, 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 blah. Cardano too. This is, by the way, FNGU. This is the stocks market, right? And so what's interesting about, well, we're not going to get into that now. So what CTMX offers potentially, it's all experimental, is the advantage to be trading something like Solana. And you could see here in 2023, this is starting here. So again, remember the blue is the new account, is the all-time high account, the high watermark. And the green line is the account balance. But if you could see over here, you see in March, Bitcoin making new all-time highs. And if you look down at Solana, it's just running sideways, which is normal. Even though all these things look like they go up and to the right, that's not what happens. Most of the time, for months, you are running sideways in drawdown. Now, the drawdowns are quite attractive, right? On Bitcoin over here, you can see a drawdown of 10%. Right, so back to dollar cost averaging. I think right now, if you started dollar cost averaging off of the high, you are not in Ethereum, or maybe now that we're starting to move up, but Bitcoin right around break even. And again, if the business cycle is allowed to play out, it could be a long time before you move into the green. Either which way. So Solana, Cardano, Ethereum, look, they offer a lot more potential. Let me show you, coming back just to, this is since the last halving. So if you look at Bitcoin since the last, that's not since the last halving, that's since 2018. This is, I'm trying to find it for you. This is since the last halving on Bitcoin, right? Now look at the difference between what we're utilizing today. This is since the last halving. I mean, 965% with a 17% drawdown is incredibly highly desirable. There's no question about that, right? This is since May 2020. CTMX, which is additional filters built upon CTM 2.0, watch what happens here to the total number of trades, right? And then watch what happens to the percent profitable as you then view and look at Bitcoin. And you could see that from the halving, right, the total number of trades is down by like 30 trades. The percent profitable increased by 7-8%. The drawdown decreases, and look at the return follow through. But why? Like look at Solana. Again, experimental. So here's the thing: Solana's entering long here, and the problem with that is this. This is what I wanted to show to you earlier. Not that it's a problem; it's unusual. So if you look at 2023, right, and you can see Bitcoin over here in January enters first. You can see Bitcoin, Ethereum, they're entering the market. They're leading the way. And there's no entry on Solana. You see it comes much later, a week later. And then you could see this next entry over here on Bitcoin. Bitcoin leading the way in March, following by Ethereum. Solana is not entering the market. Come back down over to this big move up that we just saw in June. And you could see Bitcoin, Ethereum, again, Solana following much later. This time Solana is leading the way, right? It's not just leading the way, it's leading in profitability too. Let me just jump back right here. I'll show you in a minute. Now, I wonder what happens, like, so could you be saying, well, Solana's telling us something? Like this was, so let's go back and let's look at what happened during, let's say, 2021 over here, July, Solana with this move up. But again, look at Bitcoin and Ethereum. That was a big move that summer of 2021. We saw Bitcoin move from, 30,000 to 69,000 in a few months. It was a prolonged move. Bitcoin was actually leading the way. Ethereum led the way. Then Bitcoin and Solana again after it. So what happens if we go further? Early 2021. Again, you could see that Bitcoin, Ethereum leading before. So this one, I see just a noticeable difference here that Solana is actually leading. Not only is it leading, it's leading also in here already holding a 6% gain, where Ethereum here is only holding a 1.5% gain. So I'm not buying this current move that's taking place. I'll be happy if it continues to extend up. But the way that I look at it and the way that I always look at it, it's just another individual trade. And I know, for example, that my win percentage is only 37%. So I expect 6 out of every 10 trades I take to be losses, right? So this is just, I'm taking the entry, but I don't have any type of emotional attachment to it. Sure, I hope it extends. I hope it carries. I hope this is one of the bigger ones, right? Because even though you're dealing with a 37% win ratio, if you look at what's happening over here and you look at the average win, 9% to the average loss, 1.8, it's a 5-to-1 risk reward ratio. So all I say to myself is, on this entry here today, well, I have a 5-to-1 risk to reward. On every entry I take, I have a 5-to-1 risk to reward. Does that mean that every trade that I take, has what it does mean is that not only are 37 going to be winners, it doesn't mean that out of the winners that I'm going to see that 9-point-something% gain. Actually, it's only a few of those trades that go on to make that. And if you go back and you're looking at, let's say, the profit over here, so you could see this is a winner. That's not a 9% gain. That's not a 9% gain, right? I mean, that one's a little bit above. But the whole thing is a small percentage of these winners, and there's only 37% of the winners, only a small percent of these are big winners. Now, some of them are really big winners, right? And those are the ones that make the overall average over time add up to that 9%. So while a lot of people, when they're trading the markets, are entering a trade, they did all their work. They're like, okay, this is a trend line break. I have a breakout, a retest, and a resumption. And they get into the trade. Not only do they get into the trade, they position it correctly. They're like, okay, if we trade below this, the retest, I'm exiting the market. Or if we trade below the last swing low, that's my stop loss. Or if we trade below the last low before the breakout, that's my stop loss. And depending on where they put their stop loss, they're managing their position size. But what happens is, because they put all of that work and analysts into this, and because they lined everything up correctly, now just because you entered the trade correctly and you did your analysis and you know what's going on, it doesn't mean that the trade is going to work out. It's just another trade, even if it's discretionary. So a lot of people that are trading discretionary, they get emotionally tied to this trade that they just took. And they want it to be the big winner. right? They're not prepared because they did all of that work and put that effort in just to go ahead and say, well, I understand what my, risk to reward is and my overall win percentage. And maybe they're trading like at a 50% win rate. So they have to understand that 50% of their trades are going to be losers. So they should be prepared that this is just another entry. It doesn't matter if it works out or not. I'm only right 50% of the time, right? I'm more comfortable being right less than 60% of the time because that helps me mentally. Every time I take a trade, I'll just assume it's going to be a loser. It just makes having any type of attachment to it that much less. It's an advantage. Now, that's not why, if I could have a higher win percentage, I want it. You could see the potential of CTM 2.0 offering higher win percentages on Ethereum here. Look at, this is since the last halving. Since the last halving. Is that even possible? No, this is since 2018. That's not possible. That's Bitcoin since 2018. 10% drawdown, right? So 42% win ratio, 54% win ratio. Cardano here. So, under 50% win ratio. But a lot of people, where they make the mistake is that they're just looking to be right. That's not what a successful trader looks like. A successful trader has, first of all, an edge in the markets that they developed. What's an edge? It's a trading plan. Your trading plan could be whatever it is. Now, obviously, you want to have a trading plan that is offering you that edge. You want to become the casino. You want to know that over a given amount of trades, right, you're going to end up ahead, right? And your edge could be like, I was thinking something silly like, like I see a lot of people try to trade off the RSI. And so maybe, when the RSI is overbought, you're looking for some type of reversal, and then you're selling that, hoping for those overbought conditions to revert to the mean. And if you're able to manage your risk around that, and you're able to know that sometimes overbought remains overbought, therefore you have, a stop loss and reentry criteria, whatever it is. And a trading plan is having a methodology in the markets that's all that you trade. You'll never be successful if your approach to the markets is like, I'm buying and are selling here and doing it off the cuff and off the whim. You're going to lose a lot of money. And anyway, let's get back to the conversation. Do you have a beautiful Saturday? You did from the beginning? Though this is just a chill session on a Saturday. This is just for fun. And this was about just touching base with all of you, just to let you know that you're really loved. The only reason that there's not much activity on the public end is simply because there's no way that we get to build and achieve the things that we have without that focus. And that is why that we've just been doing what we've been doing. I think it's important because as we approach the halving, I think a lot of people have expectations of what is going to transpire. And I'm not convinced that's what we see. Coming into the end of the year, historically, has been a very good, right? Especially during an election year, right? It's been very, very, look at this. This is insane end of the year, right? Now, we've had in the equity markets, NASDAQ in the first 6 months was up over 20%. Historically, when the NASDAQ has that type of the beginning of the first half of the year, its second half of the year, you've seen actually more of a mean reversion. I think that is up during those situations, up about 5%. This time is potentially different. And you know what? Maybe it winds up being the same. Maybe we are to see whether it comes from the U.S. Treasury, whether it comes from China, or whether it comes from the Federal Reserve, some type of reversion of monetary policy into outright easing. or if anything like that happens, we could see a lot of similar 4-year cycle behavior. It could line up once again, but it could not, right? And we just want to be prepared for everything. So I mean, the election years 2000, 2008, those were bad years. So again, an election year, it could go either way. Getting caught up in historicals, it's like a good way to gauge where you are, but it's definitely not any type of tradable investment thesis, especially in the situation we are. So we'll try to walk everyone through it and work it out all together in the months ahead. Right now, I just want to say lots of love. Enjoy your Saturday, and God bless you. I'll see you all soon.